Okay, so thank you everybody for joining us today. This is the last regularly scheduled weekly updates that we've been having for PPP loan forgiveness and open Q&A. For those of you who don't know us, well, having a little trouble with my, there we go. Mel Comer and I represent the leadership team at ProfitLink. ProfitLink does CFO advisory and accounting services for tech and blockchain companies, as well as professional service providers. If you guys don't know who we are, I'm Anna Masker. Mel Comer is my partner in crime, and she will be managing the chat function. And Mel, if you don't mind just putting our contact info in the chat, if you have any questions for today's webinar, just feel free to reach out. So we've been doing this PPP loan forgiveness for about 8 weeks. We've had this weekly Monday morning open Q&A, had fantastic questions that came in, lots and lots of participation. We know it's an ever-evolving situation. I think a lot of our questions have been answered. So we're going to be kind of rejiggering our webinar structure, and we're going to be doing these a little bit more infrequently with bigger updates as they go on. So again, I'm Anna Masker. Mel Comer is going to be managing the chat. If you have any questions, throw them in there. Our firm, ProfitLink, we help clients not only with their PPP loan calculations, has kind of been our MO for the last couple of weeks, but we help clients in cash planning, forecasting, financial modeling, helping implement technology stacks around your accounting side, automation, as well as we do some of the tactical work of senior level accounting, bookkeeping, closing your books, issuing KPIs, doing monthly financial reviews. So our services go beyond just PPP, but we're going to focus on that today. So as we start off every webinar, this is for informational purposes only. We're not here to provide tax and legal advice. We ask you to contact your CPA or your attorney for your specific situation. And also, as we've seen with PPP, our recommendations today may change based on the guidance that's released by the SBA and the Treasury Department. As we know, this has kind of been an ever-evolving challenge. So what we're going to cover today is going to be, 3 major points. We're going to just do a very quick review of the PPP Flexibility Act that was approved last week, the week before last. We're going to take, there were some further clarifications that came out in the interim final rules that were released, of course, on Friday, because they love to ruin every accountant's weekend. They release them like Friday nights. And then we're going to talk about something really important around some of the surprises that we feel are lurking in the PPP forgiveness that you need to be aware of. What we try to do in these webinars is not just to regurgitate what the guidance is that's coming out, but really interpret it for you guys and to make sure that we're thinking 2 steps ahead. And that's where that surprises component comes in. We're thinking, there's going to be some things that we need to consider and you need to be thinking about and having conversations about now rather than at the time of loan forgiveness. Okay, so I just had a laugh. I think this is getting a little bit ridiculous. These were the 2 things that were issued, I should say, not this week, it was last week. The interim final rule on revisions to the first interim final rule and the interim final rule on the additional revisions to the first interim final rule. Like, it's getting ridiculous how many revisions that are happening. I just thought that was funny, so I thought I'd bring that up. Okay, so let's just quickly go over the major provisions of the PPP Flexibility Act. This is, what I say is PPP before the PPP FA, which is the Flexibility Act, and then the Flexibility Act. So we all know that the term of the loan has changed to from 2 years to 5 years. And the key thing is the timeline to use the funds has moved from 8 weeks to 24 weeks, or December 1st. And then the repayment of the deferral, meaning repayment, the deferral of your loan repayment goes from 6 months until the loan is determined, or 10 months from the end of the covered period. And then also they dropped the payroll to non-payroll costs for forgiveness from 75% to 60%. Okay. In the Flexibility Act, they lowered it from 75 to /25 to 60 to 40, and they had put in there it was 60% of your total loan amount, not the forgiveness, which was what was covered in the PPP before. Okay, so let's talk about what the new changes were. So there was a lot of discussion around the 60-40 rule. The way it was worded in the act was that if you didn't spend 60% of your loan amount on payroll, none of it would have been forgiven. And the SBA and the Treasury went back and clarified, no, that's not the case. It's 60% of your loan forgiveness, not the total loan amount. So it brings it back to where the understanding that we've all had going all the way through is that it's the percentage of the loan forgiveness. Also clarified, if you submit to your lender a loan forgiveness application within 10 months after the end of your loan forgiveness covered period, you will not have to make any payments of principal or interest on your loan before the date in which the SBA remits the loan forgiveness amount to your loan or lender. So what that means is basically you've gotten a buy or stay that you submit your loan application. You have, if you submit your loan application, you don't have to start making payments until the determination of, your forgiveness amount is made. So that was a loophole that they closed in this last round, which was good because theoretically the timeline of the bank making a decision and your bank having time to review your loan forgiveness application, and then the SBA to review the loan forgiveness application, theoretically you could have started to have to pay pay back your loan before you even knew if it was forgiven or not. Okay. So it just cleans that up a little bit. And then there was another provision that was added around if the borrower committed a felony, to reduce it from 1 year from 5 years, with the exception of things around fraud, bribery, embezzlement, false statement. So hopefully that doesn't apply to anybody on the call. And then the other thing that came out was just now the loan forgiveness application, so they reflect the PPP FA provisions. So, okay. As with everything, we get some answers and we still have more answers. You've got the max payroll per employee. The question is, we've now extended our pay period from 8 weeks to 24. Do we still assume the same proportion of payroll per employee is allowable? We're still waiting on that. And that also kind of goes into, for owner's compensation, does the 8 weeks get extended to 24? We're still waiting on guidance on that. The question also is out there. Can you apply before the December 31st deadline? A lot of people will probably be using their PPP funds in not 8 weeks, maybe 10, 12. They may not use it for the full 24. Now what happens? Do you have to wait until December 31st to apply? There's some questions around how do we document the new safe harbor provisions? And then again, we have 2 dates that they've determined that you have to bring your head count, your FTEs, and your salaries back to. June 30th, that's one piece, and then the other is December 31st. How is this affected if you ask for loan forgiveness between them? This impacts the FTE and the salary reduction. So we're waiting to hear if there's going to be, an interim time period between those two. Okay. A lot of people have told us they are not able to use their funds by June 30th, which is, in a few short weeks. And so, there's some questions around that. Okay. So, and this is, we're going to talk on this a little bit later, but what are the tax implications if you start your loan forgiveness process on December 31st? So if you have to go through the next 6 months kind of in a fog as to whether or not you're getting your loan forgiven, you know, and you can only do that or start your application on December 31st because that's your look back period, you know, how are you going to plan around that for taxes? There's some tactical questions we have about what's the mechanism for changing the term of the loan 5 to 2. Do you just call your banker? I don't know if it's an automatic thing, you know, and it adds complexity if your loan is sold. So those are some of the questions that we have. So just to kind of pile on a little bit, we think that there's some other surprises that we need to take into consideration. So I feel like we're going to be getting more guidance around some of the questions that we talked about. But then there's some of these underlying issues that, again, like I said, we're trying to stay 2 steps ahead of this on the PPP side and think about the implications to the business. But we're calling those the surprises lurking in the PPP loan forgiveness. And the first is, you know, question is like, why haven't we been talking about this sooner? And it's not us, we've been thinking about it, but you know, I think people have been really distracted, right? There was this mad rush to get funding in the beginning, you know, and then the rules kept changing. So we're all just trying to keep up with the rule changes that are happening. Our focus, or a lot of people's focus, is trying to maximize forgiveness and using the funds. And, you know, when we only had an 8-week period, a lot of people were trying to like figure out how to use the funds to maximize forgiveness. Got some relief with the PPP Flexibility Act. That was a major development that has helped provide some clarity and a little bit relief in timeframes for using the funds. But now this extended timeline has increased the chances of more companies getting 100% of the loan forgiveness, or at least thinking that they will. You know, many businesses are shut down or at reduced capacity. There's no way they could have used it. Now, a greater proportion are able to probably use 100% of their funds. So we think that there's some things that you need to take into consideration. The first is that you have to consider taxes. So buried in all the chaos, on April 30th, the IRS ruled that expenses were paid with a PPP loan, then later forgiven, are considered non-tax deductible. So that means if you received a $100,000 loan in PPP, you used it for allowable expenses, whatever, you hit all your safe harbor targets, and then you got 100% of your loan forgiven, you're in the highest tax bracket, you could have a tax bill of $37,000. So think about that. You've just spent $100,000, and now you potentially owe another $37,000 in federal taxes alone. There is a law that was proposed in the Senate, which referred to the Committee on Finance to reverse this, but the Treasury Secretary and obviously the IRS opposed this, so I don't know where that actually stands. So we're not going to bank on that, but feel that there's a tax implication. Well, there definitely is a tax implication for PPP. Now the question is, who gets impacted by this? You know, back to our original discussion around the December 31st deadline. If you're waiting to December 31st to file your loan forgiveness, you know, that decision is coming after the end of the year. So if you file on a cash basis for your tax reporting, you may be able to kick that can down the road for 2021. But if you're on an accrual basis, you should be recording this loan forgiveness in the fiscal year of 2020 because it applies to 2020. So we anticipate there's going to be more guidance coming out about the deadline period. Right now, like I said, there's 2 deadline periods, the June 30th and December 31st. You know, will they allow you to apply for PPP loan forgiveness middle of the year, or, you know, in August when your funds run out? But, you know, a big provision of PPP is looking back to say, did you restore headcount and salary? And right now, the only 2 time periods you can compare that to are the 30th of December and the 31st of, I'm sorry, 30th of June and 31st of December. So, you know, so that pushes people back into 2020. sorry, 2021 if you only have December 31st. Okay. So, so what can you do regarding this potential tax surprise? The first thing is to project your loan forgiveness amount now. Okay. Why do you care? Why you have until December 31st? You really need to figure out where you stand with your loan forgiveness. Then you need to contact your CPA and start tax planning as if this was a 2020 taxable event. My guess is, you know, given the amount of rule changes we've had over the last 3 months, we got 6 to go. I'm thinking that there's going to be some provisions allowing for forgiveness applications to start before December 30th. I keep saying December 30th, December 31st. So you really want to start tax planning, planning for this now. I mean, we're in June. Let's say if this becomes a 2020 taxable event, you have 6 months to start planning with your CPA how to minimize that. If you need referrals to CPAs, we work with some really good ones. We're happy to make those referrals for you, and we work very closely with them with the PPP loan forgiveness projections. And but you really need to have that conversation now, because some cases these loans are significant, a significant portion of your expenses, and therefore will be a significant increase to your bottom line. Assuming this is a 2020 event, or even assuming it's not a 2020 event, you really need to start reserving cash for the potential tax liability. And then we also don't want to bank on the new law reversing the taxability of forgiveness expenses. You know, what we're seeing with the SBA, with the Congress, with the Treasury, everything is an 11th hour decision. You know, they just extended the PPP covered period from 8 weeks to 24 weeks, with 2 weeks to go for many people, or even less. You know, as people had used up 7 weeks of their funds, now they're changing the rules. So in this case with taxes, you want to assume that those rules may change, but you want to be prepared for those, you know, now, and start planning now. And, you know, hey, if it doesn't happen, or if they reverse the taxability, then bonus, kudos to you. You've at least taken some proactive steps to make sure that you're not stuck or surprised with a tax bill in a really challenging time. We also think that the recovery is going to be much longer than through December 31st. So to use up all your PPP funds and now have a tax bill on top of that in a very tight cash situation, the more time you have to plan, the more solid you'll be in your projections and the business. Okay. So that was surprise number 1, was taxes. Surprise number 2 is loan forgiveness. In loan forgiveness is the FTE calculation. I think when you look at all of the different things that you have to take into consideration for calculating your FTEs, I mean, we have I don't know what we're up to now, about a 5 to 10 page spreadsheet doing all these calculations. Because you have covered period and alternative covered period, and then average FTEs and simplified FTEs, you have to bounce those against each different scenario. And I think we're up to about 18 different FTE calculations to figure out what you maximize. So I think where we're seeing is that people have this perception of, well, if I spend all my money, I'm going to get my loan forgiven. It's very likely if you have had any changes in your headcount, you are at risk of not getting your loan forgiven. So again, in that situation, if you had a $100,000 loan and you spent it all, now you find out that only 75% of it was forgiven. Now you have a loan you got to carry forward and pay off of $25,000. So again, we want to avoid those like cash surprises that come at the end of this program, because we're very distracted about all of the changes that are happening. So what can you do about the FTE surprise? So if you've made any changes to your headcount or annual average salary or wage rate, or reduce the number of hours per week for an employee, you have to get that loan projection done now. Kudos to those who are keeping those calculations. Make sure you've got all those scenarios worked out so you are continually maximizing that loan forgiveness. Run the scenarios so you know what your balance may be, and then strategically make hires as needed. We're doing this with our clients, and so a good example is we had a client who had an $800,000 PPP loan, and so we did their loan calculations for them and realized that they increased their hours for their employees and added another $29,000 of spend. That would actually increase their loan forgiveness by $264,000. So you want somebody to really make these calculations for you, so you're not missing opportunities for loan forgiveness or get surprised. If our client had not engaged us, and this is not a push for us, I'm just saying this is what you need to do. The 264 would have been a surprise balance at the end of their loan forgiveness. So run the scenarios, or have somebody run the scenarios for you. There's a lot of money, low-hanging fruit in there that you can tap into. Like I said, this is not really a DIY project for those who aren't fully ingrained in the PPP loan. Call your CPA, feel free to call us, but have a professional who knows what they're doing do the projections. You want to know how many weeks your PPP funds will last, how you meet the safe harbor guidelines. We're seeing some payroll companies starting to come out with PPP loan forgiveness reports. And I would just proceed with caution. They're not going to give you those scenarios like we talked about in the bullet point above. And also too, I would just, again, use those with caution. If anybody remembers with the loan application process, payroll companies had reports that they were sending to clients to calculate their loan forgiveness that were incorrect, representing some significant underrepresentation of the eligible loan amount. So some people got less than what they could have because they were using off of payroll reports. So eventually they corrected that. Took a few weeks, but in the meantime, I would just make sure that you have somebody getting a second eye on whatever the payroll companies are putting out. There's a lot of different interpretations out there about the law, and we want to make sure that you are talking to somebody who's really knowledgeable about it, and then also can run scenarios, because you have to go actually employee by employee who didn't return and look and see if they meet certain criteria. So I'm not sure how they're going to be doing this in the payroll reports, but it's just something to take into consideration. Okay, so what to do? This last surprise is that we have a safe harbor timing gap. Okay, so many of our covered periods end before the December 31st deadline. So if you got a loan on April 1st, September 15th is your is the time that your PPP covered period ends. If you got it May 1st, it's October 15th. June 1st is November 15th. So you could see what I'm saying. Like, we have at least a month and a half at the minimum to retain headcount for that look back period or that deadline. So you've got a gap there, so that unless the law changes, which I'm hoping that it will, to allow you to apply and have a different deadline period, not December 31st and not June 30th, but somewhere in between, maybe when loan funds run out. In absence of that, you're going to need to maintain or restore your headcount by December 31st without the PPP funds to supplement. So that requires that you need to do some cash planning. So again, get professional help to do your calculations and do those projections for the covered period gap to determine how long your funds will last, and then develop the action plan to achieve full loan forgiveness, meet safe harbor guidelines without the PPP funds, and not crush your business from a cash flow perspective. All of these strategies, whether it's the safe harbor timing, the FTE, or the taxes, are part of a comprehensive cash plan you need to have for your business, regardless of the PPP or not. Hate to be a downer and end this way, but you need to be really thinking about the PPP comprehensively and how it impacts not only maximizing your forgiveness, which everyone's trying to focus on, feeling like there's a little bit of breathing room now that we have 24 weeks, but there's some underlying road bumps or speed bumps that you have to clear in order to get to loan forgiveness, and think about it holistically in your business. So, So we just want to say we can help you with your loan calculations, the projections of forgiveness, etc., and with your cash flow planning. But please, please, please get some professional help in doing your loan calculations. And it's important to do them now so that you have a runway to make any adjustments or changes as needed. Okay? So that's all that we have. So we're going to open this up to Q&A. We only have a few questions in there.
Great, thanks, Anna. You know, I want to address, this is Mel, hi everyone. And I just want to say, I don't think you ended on a downer, but I look at it as a really good opportunity. You know, you've got 6 months of tax planning time. You know what's coming at you. You know the future holds for your business, but you know the mechanics of trying to figure it out are. You know, all in all, puts you in a pretty good spot to at least plot your future. So again, I think of that as an opportunity rather than a challenge or a downer. But anyway, we'll start. We got an email earlier with some questions on the loan forgiveness application, which again is really a fascinating look at, you know, the world of tax returns, and things don't always make sense just based on a quick read of instructions, and how you really need to understand more of the context so that you can get to the right answer and put the right number on what line is indicated. So I'll start with the first question was, I believe owner salaries up to 100K are eligible for forgiveness. That is correct. But on the sheet line 9, for the total paid to the owner, but the next line that may not be included in Table 1 and Table 2. Table 1 says nothing about owners, just the maximum includable salary amount. The worksheets seem to contradict each other. And, you know, the answer is they do, without understanding the context behind what the tax form is trying to get at. And what they're doing, really, the tax form is really separating owner's salary into 2 different buckets. One is, does the owner pay himself a salary? For example, in a C Corp, you as the owner would be on payroll collecting a salary. That's bucket 1. Number 2 is, if you are not a C Corp or an S Corp that pays yourself as an employee, but more a sole proprietor, a single member LLC, a partnership, where at the end of the year you get a schedule. You don't generally pay yourself a salary, but the earnings you get in the business show up on your Schedule C or your K1 at the end of the year. So for those owners, self-employed people, you would look to your Schedule C earnings, and, you know, in the original bill, divided that by 52 times 8 for the 8-week covered period. Again, as Anna pointed out, we're still wanting to know if they will extend that amount from dividing it by multiplying it by 8 for 8 weeks, assuming they will make that 24 weeks, but that hasn't been officially said. So if you are the single member LLC or sole proprietor, that's what goes on line 9. If you are an employee of your company and the owner, then that's what gets picked up in payroll costs. So again, the worksheets only contradict themselves. Oh, they only seem to contradict themselves if you don't really understand the points that the rest of the context around it. The next question on that was around the 100% forgiveness. And again, it gets into the mechanics of the worksheet. And so you will get 100% forgiveness if on the worksheet it's calling for the 75% payroll. Now, as we know in PPP Flexibility Act, they changed that to 60% minimum on payroll costs. And again, what this form has you do, it has you do some math where you take your payroll costs and you divide by, you take your actual costs. So you take your payroll costs and divide by 75% to see what your maximum payroll would be. And then you take the lesser of what your actual covered costs were, or your loan payment, or the 75% of your payroll costs. So again, that's just mechanics. You can get to 100% forgiveness on the form. You just have to understand what the calculations are doing. And then the final question on the mail-in, the email, to meet the numbers within the 8-week period, can an employer run a supplemental payroll to reach the necessary amount? Again, that's now 24 weeks. And the answer is yes. The wording in the bill and subsequent guidance talks about paid and incurred. So you absolutely, if you ran a supplemental payroll, you would need to pay it out during the covered period, now that's 24 weeks, in order for it to be considered as part of the forgiveness amount. And then Anna, I will now go to the emails or the chat questions. Let's see, excellent webinar. Oh, thanks, Rich. Rich is a friend who's really thinking about, he's a tax CPA, and thinking about ways that people can do their tax planning and to make sure that they understand all of the ramifications, because it gets really complicated. You can be in, this can put you in a different tax bracket. This can affect, many different things in your business, not only on the tax side, but depending on how your accountant chooses to record the loan on your books. And there's the AICPA came out with guidance to record it either as a loan or as an advance on a grant. And then depending on what your individual situation is, that could have big ramifications as well. For example, if you have loans and you have loan covenants that have restrictions on the amount of other loans that you can have, you may want to think about recording it as a grant advance. But again, talk to your tax advisor, talk to your accounting advisor to make sure you understand what all of the ramifications are on these, to make sure that you're in the best shape. Anna, do you want to take the next one?
So, so do you have to pay your staff first? And if you're collecting PUA, we assume you cannot double dip. That is correct. You do not have to pay your staff first, but you are capped at what you get paid as a say if you were an S Corp, the law has limited, or the interim final rules have limited what you can get paid for, it's capping it at what you got paid last year. So what they don't want to have happen is that you get a, you give yourself a nice big windfall and people are let go. So that was the first question. The pandemic unemployment insurance PUA, I believe you cannot double dip. I have to take another look at that, but I believe that is the case. So, okay. Well, it's a little quiet. It's very quiet today on our Q&A, but we have one more. Okay, let's see. Given the new FTE rules, after we exhaust the PPP funds and we use the shared work program, will that impact forgiveness? You know what, Michael, I'm not sure I'm going to be able to answer that with definitive. So if you can just email me separately, our contact information is on, we'll get you an answer to that on the shared work program. Okay. Dina, okay, where can we get the loan forgiveness calculation worksheet? So in the loan application, they have a very rudimentary worksheet for you to do the loan calculation. I don't believe it is really robust. We've created our own model in Excel with the various scenarios. Would you agree with that, Mal? I mean, I think if you follow the instructions, like, I think we went through it and created a spreadsheet on our own to do it. But it's almost like we joked around about this, like when it first came out, it's like, if you like filling out tax returns, if you go to line A, but, do this calculation, then drop that number to line 14, and it's this cross-reference, and it's a little confusing. We find it easier, Dina, since you're in finance, to probably do it in Excel anyway, or again, contact us and we'll be happy to help you with that. Thank you. Thanks, Beth, for the shout out. Hire Anna and Mel. Very wonderful. Okay, so I think that is all that we have for today. If, you know, again, if there's anything we can help you with, let us know. Thank you all. For those of you who've been regulars on our weeklies, we really appreciate it. We're brewing up another comprehensive PPP loan forgiveness application, PPP program webinar, just to take everything that we've discussed over these 8 weeks, all the things that have changed, and kind of boil it down to what the program is today, including some of these surprises, including some of the open questions, to kind of give those of you who've been following along just like a, you know, just a point in time look at, okay, where does the program stand today and what do you need to do with it? So that'll be coming not next week, the following week, potentially. We're looking at like Tuesday, the 30th. So stay tuned. I will send a recording of this webinar to all of you and everyone who's registered, as well as the link to register for that PPP one. So if you've been on these calls, I would highly suggest you come to our one in 2 weeks, where we're just going to kind of boil everything down, wrap it up with a bow. Hopefully, if there's not too many changes in the meantime, we'll cover those as well, but kind of give you just like, it's hard to, you know, boil everything down with all the changes back to it. So, all right. So thank you everyone for joining today. It's been a pleasure running these with you guys. And thanks all for the interactive questions. We've been lovely. Again, call us if you need any help with your loan forgiveness projections or calculations. And thanks, Mel, for being the master chat manager. And we hope you have a great day and a great week. Take care, everybody.